Welcome back to the Our Town Podcast. Today I have Eymard De Ocampo with Torre Associates, and he is my insurance provider for our health insurance. And I just wanted to introduce you all to him and talk about all the ins and outs of insurance for self-employed and 1099 people. Thank you so much for coming.
Thank you, Chris. Thanks for having me.
Of course. So I've been with you for a couple years now?
Yeah, I think going on 2 years now. Yes. Yeah.
And you made a transition for me pretty easily to take over all my health insurance and line me up with the exact health insurance for the employees that I needed. And I wanted to give back to you and make sure that everybody knows what a good guy you are.
Thank you. Thank you. Yes.
And make sure that they know that they can also get self-employed insurance. And if they're even just a small provider and maybe have one employee, that they can also get like a group insurance as well.
Yeah.
So starting off with a self-employed person, like the very beginning, you're a 1099, you don't have insurance. What is it that they need to know about that?
Yeah, so for the 1099 self-insured or self-employed person, the market for them would be definitely the individual route. There are markets to go. Covered California, for example, offers individual coverage. And Covered California, of course, is the state-run marketplace here in California. Everyone is rated under 100 employees. Everyone is going to be rated based on their age and their zip code location. And so someone who's a 1099 would be able to check the individual market through Covered California for individual coverage. For corporations, LLCs, employers, or business owners that have at least one employee on payroll that's full-time can go and get group coverage insurance. Also in the same market, the Covered California market, there's also a private market called California Choice. And there's other ancillary markets called Choice Builder, which is your ancillary markets are your dental and your vision programs. They offer group coverages there as well. So you could go to the direct market as well. That's basically going directly to the carrier, like a Kaiser, like a Sutter Health Plus here in the Sacramento area, Blue Shield, Anthem Blue Cross. So there are opportunities to go to the various different markets more often when you are an employer with employees, active employees on payroll.
Okay.
Yeah.
Now, is there such thing as do they still have HSAs anymore? Is an HSA something good for a self-employed person?
Yeah, HSAs are definitely still around. You would have to enroll in what's called a high deductible health plan that qualifies and fits all the criterias to partner up with a health savings account. And for individuals or for self-employed, there are HSA products, HSA high deductible health plans that are available. And then, of course, there are certain tax rules that would apply as far as being able to contribute towards your HSA account. I don't have the number in my head, but it has for 2024 increased. So that allows, an individual to go ahead and fund their HSA account with whatever banking institution that they have selected.
Okay, and do you know if is that tax deductible or how does that work?
Yeah, the idea of the HSA is you can fund your HSA account on a pre-tax basis through payroll deductions.
Okay.
And when you go out and use those services, those qualified eligible services, you could use whatever those out-of-pocket expenses from your HSA account. So basically, you're paying for those services on a pre-tax basis. And so that's what makes the HSA a very attractive plan. Because if you're healthy and you want to sort of fund your health savings account, you can certainly do that. And it builds as you continue to fund it. And if you remain healthy, you're not tapping into your account, that money stays with you. And there are certain tax benefits down the road that will allow you to draw from that once you reach retirement age. But other than that, or prior to that, any, again, eligible health services, whether it's, your office visits to your primary care doctor, radiology, your prescription drugs, things like that, you could draw from your HSA that you've pre-funded, and you've pre-funded that on a pre-tax basis.
Okay.
Yeah.
No, that's good. So what would you say the main difference is between somebody just doing, now if you go to the California, would you say covered California? So let's say you go to covered California as a self-employed person. Would they go to you?
Typically, they would go directly to the Covered California website. There's a lot of individual questions that one would have to answer on the website.
Yeah.
On the group side, there's no health questions. There's no, it's not quite as extensive as an individual. And so, unfortunately for me, I would have to have the applicant with me to go through the various questions on their website. But I can certainly help, business owner with, the process and obtaining individual coverage.
Okay.
Yeah.
Now, when it comes to the group, so is there a big difference in cost between doing a self-employed person and the cost for doing group coverage? Do you get much better pricing for group coverage?
Actually, no. The rates here in California are all based on your age and your resident or your zip code resident. So
really?
Yeah. So someone who's looking at one plan that's maybe 56 years old and another person looking at that same plan that's 26, it's going to be a mass difference in the rates. The older you are, the more risk that person has, and so the rates are going to reflect that.
Okay.
Yeah. So there's not much or any difference in the rates as far as the plans, but it is based on age and your demographic.
Okay.
Yeah.
So with a group plan, what are the benefits? So once you have a corporation, you've hired your first person, you're able to do this group plan now. Could that extra person be your wife, or would the wife have to be on payroll too?
Good question. So for small businesses
Or husband?
Yeah, for small businesses, the criteria to have group benefits, it has to be an active employee on payroll. But if that one employee that's enrolling is a family member or a spouse or a daughter, son, unfortunately, the underwriters won't approve that. So it has to be someone outside of the family that would make it a legitimate group coverage.
Okay.
So you could have your spouse who is your employee, but another person outside of the family has to also enroll and be on the plan to make it work.
Okay.
Yeah.
And when it comes to, so you hire your first employee, group coverage, now it opens up a bunch of possibilities for you. Okay. What are some of the possibilities that it opens up for you?
Yeah. So, as business owners in the small group market, you are required as a business owners to contribute at least 50% of the employee only rate. Okay. So with that in mind, it lowers your taxable income, and so you can benefit from that, right? So there are some tax advantages by contributing towards the cost of your employee's health plan.
Okay.
Of course, on the employee side, their 50% portion is on a pre-tax basis as well, and that of course lowers their taxable income. So you get that tax break versus going out and maybe getting an individual coverage, right? You don't have payroll to take advantage of those tax advantages.
Okay.
The other advantage, things that open up is now you become competitive in the marketplace when you're vying for talent. When you can say, hey, I have these type of employee benefit offerings, and if you're vying for talent, if you've got a candidate, he or she may be considering your position or company over someone else's if they don't offer group benefits.
Okay.
Because again, it can be difficult on an individual basis to go out and get group coverage.
Okay.
I'm sorry, individual coverage. Yeah.
Okay.
Yeah.
Okay. And then so you have a whole bunch of different packages to choose from, and different carriers as well. So you have everything from what carriers do you have?
Yeah, so we work with all the various carriers that are available. And in the two markets that I mentioned, covered California, they offer Kaiser, they offer Blue Shield, they offer some health net plans as well. In the private market, which is the California Choice market, they offer Kaiser as well. They offer Anthem Blue Cross, United Healthcare. So depending on what your need is as an employer and what choices you want to provide, you can go to either the covered California market or the California Choice market. One thing to keep an eye out for, the covered California market, as I mentioned, is a public market, so it's run by the state. The California Choice market is a private market, and so there are additional admin fees that they apply in your premium, depending on the size of the employer. It can range from like $30 a month to $50 a month.
Okay.
And so that's something to consider for, a small business owner is to if you can get the same type of plans in the covered California market, do you really want to spend extra money on the private market? Now, again, the rates in both markets are going to be exactly the same. A Kaiser plan in covered California and the same Kaiser plan in California Choice is going to be the same exact cost for someone, let's say, age 35. So with everything being equal, the difference is again the admin charges that you're going to see on the California Choice market.
Okay. Mm-hmm. Now, if somebody was just getting started, if somebody just started their corporation, and they have their very first employee on day one, can they get coverage right away, or is there a period of time that you have to wait?
Yeah, great question. I just installed a rail company who recently hired someone in the middle of May. And in these market spaces, they do they want to be able to underwrite the company very diligently in making sure that you're truly a business operating with, employees. And with that said, because this new hire, their number one employee was hired in May, we were looking at a June 1st effective date for this group policy. However, the market says we need at least 4 payroll periods to show that this person is legit, right? And so we ended up installing them for a July 1st effective date. So unfortunately, you typically won't be able to just have, when you have your first hire, you're not going to have that date as the beginning date. So I would say budget around a month and a half as far as offering a group policy.
Okay.
Yeah, from your first hire.
Your first hire. Yeah. But let's say you have a company that's been running now and you have 4 employees, you're adding another one on. Does it start right away for them, or do you have that same kind of wait period?
Yeah, so if you've already got a group policy established, the employer will dictate what their eligibility waiting period is for their employee. And I typically advise my clients to make it no longer than the first of the month following 60 days of employment. And that will fit in nicely with the rules of offering benefits because it can't go beyond 90 days. Okay. 60 days is a good fit for a lot of my clients and employers. You can be generous. An employer can be generous and say, well, I want to make it the first of the month following 30 days, shortening that eligibility waiting period. Yeah. They can even be more generous in saying, we want it first of the month following their date of hire. So if someone gets hired on July 15th, their effective date would be August 1st. Okay. So it just depends on when you want to be able to start offering benefits for your new hire.
Okay. Yeah. Okay. Now, do you guys also do dental, vision, all that stuff as well?
Yeah, there's a number of markets to go to for those ancillary lines of coverage: dental, vision, disability, short and long-term disability. Okay. So you've got the same players: Delta Dental, Guardian, MetLife Dental. And United Concordia, for example, is a carrier that's strong in the market for dental and vision. And what you'll see is a lot of the carriers, they'll, if you want to bundle certain plans like dental and vision, you might get up to like a 5 to 10% discount on the rates when you're able to bundle some of those lines of coverage.
Okay.
Yeah.
Now, when it comes to getting set up, how difficult is it? What does it take to get set up with a full insurance package for your employees?
Yeah, it's definitely you would probably want to start a good month and a half to 2 months if you're thinking about putting in a group policy. There is some paperwork which for the employer, for the company, there's usually a group application that I would help fill out all the basic information and then pass on to the business owner for them to review and sign and date. Then, of course, there's enrollment applications for the employees to enroll. We do offer an employee benefits portal where instead of filling out forms, we can do online enrollment for new hires. And that's always easier for employees to be able to just go on their phone or go on their laptop and type in their information to enroll versus paper. Or then you're chasing down, following up everyone, hey, can you mail that in or fax it? So we do have that capability of providing an employee online portal, benefits portal. And then there are some certain documents that will show the market that you, again, have, a legitimate business. So you would have to provide a DE-9C, which is a quarterly wage report that you can get from your payroll vendor that lists all of your employees that are on payroll. And based on that, the market will say, okay, you have 15 employees on this payroll. Identify which ones are enrolling, which ones that are waiving, and then which ones are not eligible, like, whether they're part-time or maybe they're no longer with the company since that quarterly wage report has been issued. And the market just wants to make sure that everyone's accounted for and that you meet certain participation requirements. And that usually is 70% of not your entire group, but 70% of eligible employees. So in order to have a group policy, you have to meet the 70% participation requirement. Waivers does not count towards that, which is good. And then, of course, employees that are part-time doesn't count. So it helps the employer be able to still provide a group policy. If you've got 15 employees but only 5 are eligible, that means 70% of 5 is what you'll need to make to have a group policy.
Okay.
Yeah.
So is the policy and all the money that is spent, it's all based on age, it's all based on the area that they live in individually, or is it based on the group and where the office is located or where the home office is located? Yeah,
usually the group, the headquarters of the business is where you're underwritten. So, but if you have someone, let's say, that's telecommuting and works in San Jose, California, their zip code, they might be in a different zip code. They're in a different zip code in a different area.
Yeah.
That might dictate a rate difference based out in San Jose than
for that one particular
person.
Okay.
Yeah. And then the market wants to be able to make sure that you're in a service area based on your zip code. So let's say we were talking Kaiser, right? There are Kaisers all over California, but there are some spots that are in rural areas that Kaiser's not evident in, right? So if someone was working out in a zip code that Kaiser isn't part of that service area, Kaiser would not be an option for that particular employee.
Okay.
Yeah. So yes, your headquarters location.
Would that one employee dictate what all the rest of the employees get, or would they be able to go with? So let's say I have Sutter set up, right? And then I have one person that works from home, but she works from home from Nevada.
So depending on like what plan you're choosing, let's say you're only offering an HMO plan, and an HMO is a more restricted service area. And if this particular employee is out in Nevada and there's no HMO availability out in that person's area, then you might want to think about offering a PPO plan, which allows an employee to see any provider, physician, hospital, lab that has an in-network and out-of-network benefit. So an in-network means they're providers that are contracted with that particular carrier, and they would have an opportunity to have, less out of pocket within the network. Or if they're seeking a provider that's out of network, then there is a little bit more out of pocket risk for that particular person. But at least there is some coverage when someone who's not in a typical or traditional service area like an HMO, then a PPO is something that you would probably want to offer as well. And in the small group market, you're able to do that. You're able to offer multiple plans, HMO, PPO, high deductible health plan with an HSA. It gives small businesses an opportunity to offer choice without like sacrificing or without being siloed into one plan and not giving your employees choice.
Okay.
Yeah.
Now, if somebody wanted to start to get set up with you to get they just started their corporation, they've got their first employee, they're just getting going, how would they contact you?
Yeah. So, a phone call, introduction phone call, just to kind of get an idea of the type of company, what the industry that they're in, and just it's really easy to get quotes. So I would just need what we call a census template, which just identifies your employees, all your employees, their date of birth, month, date, and year, and their zip code. And those are the three pieces of information on the census template that I would need in order to get a quote.
Okay.
Yeah, and that starts everything off. Once we dive into the plans and the plan options, I'll get back from the market the various plan options, the rates, and what I'll do is I'll put that together in a nice presentation with some comparisons of certain plans, and from there the business owner, the decision maker can take a look and see what plan fits their budget, what fits their culture, the various choices in medical, dental, vision. So there's a lot that I can come back with as far as options.
And is health insurance, if you do have a company and you do have an employee, is health insurance mandatory in California?
So in California, if you have 50 full-time equivalent employees or more, then you're required to provide health coverage.
Okay.
If you are under 50 full-time equivalent employees, then you're not required to provide group benefits.
Okay.
Under 50, the small group market, employers are still finding that it's still worthwhile to offer group benefits if they again are competing and want to retain their talent, their current employees, and again attract as well. If they're looking to grow, then they're needing to compete with their benefit offerings.
Now, do you cover everywhere in California? I mean, from the Oregon border down to Mexico?
Sure, yeah. De La Torre and Associates Insurance Services, we cover California. We actually also have a footprint in Arizona, in the Phoenix area. And our firm actually dabbles in the federal space. We actually have a program called Fed Advantage, which is a voluntary supplemental disability program for federal employees to enroll in. Currently, the federal government doesn't provide short-term disability, and so our Fed Advantage program gives them an outlet and an opportunity to get on kind of a group chassis in purchasing short and long-term disability.
Is that like an Aflac kind of thing?
It is. Yeah, it is. I like to say our rates are 3 times more affordable than Aflac, and our benefits are a lot more richer than what
I
you would
just
see
say
in
that
Aflac.
because you see the commercials every 5 minutes.
Yeah, absolutely. Yeah. So it's what you see in Aflac is employers that introduce Aflacs to their staff as a voluntary basis, and so they can choose that and pay that on their own. Some employers may pay for that as well.
Yeah.
But yes, so we have a footprint in a sense all over the country, but our employee benefits is focused here in California and Arizona.
Okay.
Yeah.
Perfect. So if they wanted to get with you, how would they contact you?
Yeah, you can reach me via email, which is edeocampo dltinsurance.com. Our website is dltinsurance.com. And I work based out in San Mateo, so my phone number is 415-985-8519. Would love to hear from you. Would love to see how I could help in your pursuit of employee benefits and other things like compliance. Compliance is a big part of making sure that a small business avoids litigation. And so I make sure that you have all the proper benefit documents, whether it's your employee benefits summary plan descriptions, even an employee handbook is something that I can help with you developing an employee handbook, which is a Department of Labor requirement. So there are other areas that I'm happy to help in: HR resources, legislative updates. Again, I mentioned compliance are areas that beyond employee benefits. And one other thing, though, too, that separates our firm with others is we believe in education, and we do also provide financial education. We don't handle portfolios or savings and things like that and retirement, but what we do is our founder, Jim De La Torre, travels the country, provides seminars in financial management, financial debt, retirement, and things like that, just to, again, provide as a added value to our clients, as well as a way to kind of serve the community with education and knowledge.
Perfect. Perfect. Awesome. Well, thank you so much for coming in.
Yeah, thanks, Chris.
And hopefully somebody gives you a call.
Yeah, thank you. Thanks for having me. Thanks.
Awesome.
All
Talk
right.
to you.
Thank you.